Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Margaret Brodie from Rubicon Organics. Rubicon trades on the TSX Venture Exchange under the symbol ROMJ, and it also trades on the OTC under ROMJF. The company is currently trading at 52 cents with about 56 million shares outstanding, or about a $29 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. Margaret, great to see you again. We spoke a couple months ago. Very interested today to have you on to tell us all about Rubicon. You're one of the few companies in this space that seems to be going in the right direction. We've got a number of them that are going in the wrong direction, but you're one of the ones that we've grabbed and tried to find out more about. So I'm going to just hand it over to you. You've got your presentation. Why don't you just get started?
Great. Thanks, Trevor and Paul, and thanks for the opportunity to speak today. My name is Margaret Brodie. I'm the interim CEO and CFO of Rubicon Organics. Been with the company since inception, which is 8 years now in the industry, from its journey really as CFO, and recently with the departure of our founder, Jesse McConnell, I've stepped into the interim CEO role. My background is I was a competitive athlete, a rower with 5 a.m. mornings for 8 years, a CPA with KPMG for almost 10, where I spent over 6 of that after I got qualified in London, England, working on global accounts such as Diageo and BHP Billiton. Then I moved into the mining sector for 5 years with Augusta Mining Group here in Vancouver, and then on to Cannabis in 2015 when I saw the opportunity and the passion to build what could be a new business and industry in Canada. Let me just make sure we're flipping. There we go. Some classic disclaimers I know you've all read in detail, so I'll move on from that. Who is Rubicon? Rubicon Organics is a leader today in the Canadian cannabis sector with our premium and super premium brands. We have been established as a great BC cannabis company, and we are very proud to be taking our famous BC weed to the world. We have delivered 4 consecutive quarters of EBITDA profitability and 3 consecutive quarters of positive operating cash flow. We did this through our 3 brands, our flagship brands, I should say. Simply Bare Organic, our super premium flower first products, 1964 Supply Co., our premium flower first cannabis products, and Wildflower, our topical and wellness focused brand, where we delivered consistent, high quality, organic certified products that are recognized and winning with consumers. Rubicon has executed on building 2 of the strongest premium brands in Canada in arguably the hardest segment, the premium flower, delivered through the quality of our operations and our people. Really, the story, the BC weed and the legacy of it is part of why we are where we are. And if you're unaware, there are 4 places that have a true heritage of cannabis. There's Jamaica with the culture of Bob Marley, California with its cultivation influence and trends, the Netherlands with its coffee shops, and BC, where the draft dodgers from the past came and established the lore of BC weed. Any weed consumer in the world knows the power and the strength of BC weed and its legacy from the small communities and groups that established medical marijuana in Canada. BC bud is to Canada what California weed is to the US. Rubicon embraces and respects the legacy culture, and we have a team mixed with those that grew up in traditional professions to those that have come out of the legacy market that are getting their mortgage eligible and paying tax for the first time. And we're very proud of our team members with legacy roots. We're always watching the current West Coast trends to know what great, and we really know what great weed is. And we stand for it. I'm extremely proud of our interdisciplinary team that really works well together to help consumers understand what premium weed is, what it should look like. And it's not just what the package says, but it's the quality of what's inside that drives the brand promise. A few themes that you're going to hear from me today. Rubicon is a leading premium and super premium, our brands are recognized and winning on our execution, proprietary organic methodology, and the quality of what we do. These brands are some of the few long-standing premium brands on shelf, and there is considerable room to use the use of this brand value to our advantage to expand them. We play in the profitable premium segment where the 80-20 rule applies. It may be that 80% of the market plays in mainstream or value products, but most of the profitability sits in that 20% pool, and that's where we play. All of our products deliver gross margin, and we have no loss leaders. Our execution has been key, and we have used our second mover advantage to watch the mistakes of others, to not get over our skis on costs. We focus on two things in terms of cost and execution: quality, because the consumer cares, and our people and team, who I'm proud to work with every day. They have to have passion for quality and delivery to our customers to win. The Canadian cannabis market is also growing, and considerably. And within that, the premium segment is growing, and there's tremendous opportunity for growth. In the next phase, and sort of the current phase we're seeing this summer of Canadian operators, is really weak operators falling out of the system and dropping their price on product in really a last-ditch effort for just getting cash in at any prices and selling their products at any prices. And so we see that as an opportunity as that falls away, and I'll talk more about that in a moment. And my last point is our brands are built, they're recommended, and we're ready for growth. So the table is set for us to lever off to build a larger business. And we expect to continue to execute and be the BC bud leader. And I have a vision where we become the Lululemon of weed, another Vancouver-based company, so I like to reference it. A few of our fundamentals are here. We have over 2% of the market share. This was April data. I haven't looked at it since, or I have looked at it, but I didn't put it up here. It's stayed around the same. More meaningfully, we have over 5% of the premium market, which, as I said, is the most profitable and sticky on price. We're located in Delta, BC, and we produce consistent premium quality organic certified products due to our proprietary methodologies and strong operational execution. Our brands are found in the key provinces of Canada, so Quebec, Ontario, Alberta, and at our home in BC, and we cover 97% of the addressable Canadian cannabis market with our distribution. We are tightly held with 45% insider ownership, and we have consistent insider buying. So this is my favorite slide. In the early part of 2023, Brightfield, a third party not paid by us, studied bud tenders across Canada, and we were very proud to see in these results that 2 of Rubicon's brands were in the top 3 of most recommended brands by bud tenders. Our super premium Simply Bare Organic and our premium 1964 Supply Co brands held those 2 top spots, and it's a discerning and influential group. When you imagine all products are behind glass, having to be asked for with and have a conversation with the bud tender to purchase anything, that referral is very important. Furthermore, in April this year, the 1964 brand actually reached the #1 premium status nationally, and it was only launched in 2022 nationally. So we're very proud of the trajectory that it's gone through, and we believe that that is from the good reputation of what Rubicon has in terms of the product quality that we put out. Next, where we see a growth area in future is our Wildflower brand. It is Canada's favorite topical, and we're very proud and excited about this because it does not take the capacity utilization of our facility to grow this brand. It is the #1 topical in Canada with over 17% market share, and it's really a comfortable premium entry point for those looking for the benefits of CBD wellness. So it's giving us a strong platform to grow the brand into new product formats and categories. Recently, you would have seen, if you're in the stores regularly, a recent extra strength and a 1-to-1 THC CBD stick. So Rubicon was not the first LP to come to market, but we have learned a lot from watching others and understand that operational execution and processes are key to success. I really believe that now is the time of operators for cannabis companies, not financiers, to build what will be, the future Molson's or large alcohol style companies. That is happening now with the operators that are in the space. We aim to be the leading premium cannabis company in Canada through our competitive advantages. We cultivate in organically certified living soil, which provides a more flavorful and terpene-rich flower, which consumers love. We drop strains regularly and are monitoring legacy trends to deliver on new news, very similar to the cookie strategy in the United States. We have brand awareness, and our foundation is set for expansion, more profitable products, and given our capacity constraint, that gives us the ability to focus on our most profitable products. We also have the support of the Canadian cannabis community, very important. not only the recommendation I just spoke of, but we've just recently won 2 significant awards, BC's AR Cannabis Cup with our Simply Bare Organic oil tanker, which won Best Gas, to the Kind Awards, which are national awards in December 22, where 1964 Comatose won Indica of the Year. This is one I should put in a cheesy joke that it's a high honor, but I won't. I also am proud at how quickly our 1964 brand really went from a standing start to the April numbers that I said in terms of reaching the #1 premium flower brand in Canada. That's very exciting. And this is an example of where the bud tender is a really important part of managing our success and the trust that we have with them. So our success is driven by exceptional products, customer-centric approach, and strong operational execution. So what's our magic sauce? Our products benefit from the power of the sun with the protection of an indoor greenhouse environment. We use organically certified proprietary methods with BC living soil together with our craft process to make hand-trimmed, hand-packaged product delivered with care to customers. And that caring needs to show up in everything we do, and we really believe in it. It's about operational process and people to build consistency. Many of you would have seen the ups and downs in brands in the cannabis industry. So I would remind you that in the early days in 2018, when cannabis went legal, 15 to 30% of the shelf was owned by a few companies. But when you opened up the retail unit, the experience was extremely disappointing because of the opaqueness that's required in cannabis. That consumer losing their first moment of truth meant that they were disappointed and didn't go back to the brand. It's the repeat purchase and the great quality product. It's the foundation for building strong brands with longevity in Canada. So what have we built? What's out there? Our flagship brands are Simply Bare Organic, 1964 Supply Co., and Wildflower. Each is focused on a different category. Simply Bare is a flavor-forward, unique genetic, regular drops into the most discerning cannabis consumer and connoisseur. And I would encourage anybody who is in Canada to try our White Rainbow, which some would say is the best flower we've actually ever produced. And I'm very proud of it. 1964 is focused on recruiting the legacy consumer by offering classic organic cultivars that really play to their senses and their nostalgia to a certain extent. Now we cultivate for Simply Bare in 1964, but we have an outlet for product that does not live up to the quality standard, which is Homestead. So it only gets sold and is available when there's an aging issue, the strain hasn't hit with market or something like that. It's really for the budget conscious consumer, but they appreciate quality. And then you've seen that we've built Wildflower into the top topical brand in the country, and we believe there's more to come from us in terms of opportunity to grow that brand. Again, very exciting is the wellness portfolio. I believe is a big growth opportunity in the next 1 to 3 years. So in terms of our infrastructure and to deliver what we do, we started with the right size facility, 125,000 square feet with annual production capacity of around 11,000 kilos. And it's 100% owned on a 20-acre property in Delta, BC, which isn't an agricultural district, but in Metro Vancouver. So we have easy access to agricultural forces and staff. Our facility is organically certified, which means our plants and our products benefit from living soil and a larger expression of terpenes. We have a premium hang dry and cure process to make sure that the great flower we cultivate is processed with care, and we deliver consistent premium quality flower. The benefit is that of our facility is that we deliver indoor quality with greenhouse costs. And the proof of our quality operation is in our inventory loss numbers. As part of our financial statements, I encourage you to go have a look. We have industry-leading low inventory loss. So what are we doing this year? I say to our team, if you're not doing something on this list or something on the go forward list, we're not putting your resource in the right place. And I carry this list around with me. We are readying for more growth. So what does that mean? Firstly, every year we are going to have optimized yield in the top right-hand corner of our priorities. We will never be happy with our quality. We will always be striving for improvements. And that includes and we're the kids who said, what happened to the other 2% on the test? We're also taking that beautiful quality product and looking at how do we maximize the profitability from each gram we produce. Before we make any move to get bigger, we're actually launching products that do not take capacity from our facility, such as we recently launched 1964 live rosin edibles. So they went to market a very specific and interesting product that's actually done very well, working with a great partner and getting those out there to build our revenue line. It drops right into gross profit without having an impact on our OPEX. Thirdly, we're driving efficiency in processes and systems. In order to get bigger, you actually need to be ready for it. And we've seen that a number of times with a number of companies getting out over their skis. We are onboarding an ERP system and institutionalization so that we don't have reliance on key people to be able to grow. And we focus on our people. Because we're a premium business, the buzz and the love for what we do and the caring is critical. So we need every team member to care about the product going into consumers' hands. Here is a snapshot of our financial journey for the P&L and the cash flow. Against the backdrop of other Canadian companies, we've achieved consistent positive trajectory on revenue growth, profitability, and positive cash flow. In 22, for the first time, we delivered both operating cash flow positive and adjusted EBITDA profitability. Despite, the impacts of dry January, we're seasonally down and flower sales are down in Q1. We continued our profitability trend in 23 thus far. And I would note to your group that our adjusted EBITDA calculation is very clean. We're not adding back inventory losses and R&D and other types of costs. We're just adding back an IAS standard around the fair value of cannabis plants and our share-based payment and depreciation. So very clean, and it's a good representation of our business. In Canada, we are one of the handful of companies that have demonstrated consistent growth without costs out of control. We watch our costs carefully. We do monthly budget to actual reviews with each department, and we like to limit surprises. So we are the right size to deliver continued profitability and cash flow, especially as we continue to see industry changes. This is a fun slide as well, because we've seen in the last 12 months consistent rolling 12-month growth with a 68% increase in revenue and over 300% increase in gross profit before the fair value adjustments. And shortly, you're going to see the growth in the premium market that we are outpacing with our revenue. With our most recent Q1 results, you can see the results of the seasonal impacts of dry January, but maintaining profitability. And so we have set ourselves up to deliver in 23. And you can see, to get us here, as with others in the sector, we incurred significant startup costs, but given the size of our operation, now we're seeing the benefit of our work, and we expect that to be more pronounced going forward as we find the equilibrium between making sure our balance sheet stays strong, investing in the future, and delivering profitability. Right now in the sector, we are seeing some Hail Mary price drops to sell product at any price to turn into cash. And as that falls away through this year, I believe there'll be significant growth opportunities in the next year and a half. We're readying for those moments. I encourage you to review our balance sheet, our P&L, cash flow statement, and within that, you can see the rigor of our work. We are operators. We review costs carefully. We move forward with database decisions, and we believe that building this industry is brick by brick, with the future Lululemon of weed industry just now coming out with great operators who assess opportunities, take calculated risks, and consistently deliver. The brand foundations laid mean that we can capitalize on this growth. So why do we believe that we'll continue to grow our business? The market is growing. For the year ended 22, the legal market in Canada was $4.5 billion, and it is a 10 to 20% year-on-year growth going forward, which means that even this year it's going to be over $5 billion. More importantly, for Rubicon, the current trends and data indicate that the premium market will grow by over 300 million in the next 3 years. And our thesis is that that is where the profitability lies. And I think you can see that in the numbers. Sure, you are very well aware of the negative headlines for many cannabis companies who are struggling to operate in the current environment. And as I said, the legal market is over $4.5 billion, but the illicit market still holds an estimated 40 to 50% of the total cannabis market. The general view is that pricing in the current cannabis market has hit its floor, and last-ditch attempts to sell products at any price are happening right now. But there remains an excess of low-quality production and low-quality, uncompetitive capacity in the market, which we believe is currently coming offline. This leaves those companies in that tricky spot. A large portion of LPs have failed to execute on their business. They have over-levered themselves. They have too high a fixed cost base. In addition, The latest figures, which were a few months ago, was that over 70% of licensed producers have unpaid excise tax. And the CRA has now actively started to move in to shut those companies off. There was actually a ruling by a judge, I think just in the last 2 days here in BC, that the CRA is allowing those companies to sell off their inventory. So we're going to see that this summer a bit. But we do expect more CCAAs and bankruptcies through the sector in 23. So we're in a bit of a dichotomy between a growing market offset by companies and market share failing, which means we've got a very volatile market for consumers this year, but huge opportunity as they fall away for the good teams to really win. Not only will there be more shelf space to win, but with our brand recognition, execution, and balance sheet, we're in a position to be choosy in how we move forward and not let that growth opportunity pass us by. So how do we grow our business with a single capacity constrained asset? Firstly, there's organic growth. We're working to maximize our yield and quality from our Delta facility. We're installing tables. Actually, that's just begun for the remaining 50% of the facility that lacks them. It increases the air circulation space for more plants, meaning better plant health, which leads to higher terpene levels and quality. We target our most profitable products to sell with the highest return on our fixed cost base. And the growth of the overall premium flower segments means that there'll be more opportunity for us to sell in our strongest price point of Simply Bare over the coming years, where right now it's about 1/3 of our sales. Secondly, we leverage the power of our premium brands. And in order to do that, we apply external capacity to our business through our contract manufacturing relationships, such as our newly launched live rosin edibles. And as I mentioned, 2 flavors were launched in April and 3 more are now in market. So there's 5 out there. And there'll be some more exciting announcements from us in terms of Wildflower and the extension opportunities for that brand. So we are also looking at targeted and trusted contract grow relationships to fill the demand for the brand where appropriate. That wouldn't go into the Simply Bare brand, which is our super premium brand from our facility, but there's opportunity in 1964 to grow that. So this means an asset-light approach, taking advantage of knowledgeable cultivators. There's over 1,000 LPs in Canada now. So we have a lot of choice and there's only 12 buyers and we've got good relationships with the customers, which are the provinces. So we can take growers that just want to grow great weed and be able to put that through a wonderful brand platform and build our business. Lastly, we will be opportunistic. And as and when the right options arise for our business to grow, you will see that from us. And as you see in our guidance, we're expecting to be operating cash flow positive this year. And we're in a solid position. We are growing in our marketplace. The demand for our brands is loved, and that's offset by assets getting cheaper every day. I am very clear that I would prefer to bring into the Rubicon team a great operating business that is delivering as a going concern, but at a fair price to continue to grow our business strength, or a distressed asset that our team can make work for pennies on the dollar. And who knows, as opportunities arise, they seem these days to be on the phone every day. So, as I said, this is the time for operators to take over the cannabis industry and not the financiers. And as operators, we believe that we are positioned to build a great BC weed company, taking BC bud to the world. Few companies in the cannabis sector are positioned financially, such as Rubicon Organics. With our premium market position, balance sheet, and positive trajectory, we expect to deliver continued growth in net revenue, resulting in an increase in gross profit and adjusted EBITDA in the full year 23. And the one caveat I always like to say on our cash flow is pending opportunistic decisions or opportunities to improve at our site, we will take those to make sure we're in the best position going forward. So I've got a couple more slides and I'll get over to Paul, but as you can see here, Rubicon is delivered. We have a steady stream of milestones, and we've just worked through them one by one. And I can tell you, as you look at this list, there are more plans after this, and I'm not going to disclose them all to you, but we're working hard to put them in. So who are the people building the Canadian premium cannabis company? Well, women seem to get it done around here. On this exec team, we are 4 out of 5 are women. This is about people. That's just a snapshot of our leadership team. Our team is much broader than that. If you go to not our board members, but our directors below, they're 50-50 men and women, and we're very proud of that. In this spring, we announced our newly proposed board directors, and ongoing process is underway. We have brought in expertise to build our board of brand managers, manufacturers, government relations specialists, strategists, and governance experts. We are holding our AGM in September, and we expect our board observers to be successful with their nominations. And our compensation committee is currently in a third-party review process to make sure that we're appropriately compensating both board and C-suite to stay in line with appropriate comparators. Lastly, a question that I always get is what's happening with the CEO role, and I have full confidence in our board in terms of their decision making. I'm very proud of the company that I work with, and after the board is fully onboarded and in due course, they will be communicating out what the next step is for the company in terms of the CEO. But we are just very focused on delivering our milestones right now. As an investor community, here's the second last and most important slide, which is we have an extremely tight float, which means high alignment with our management and insiders, holding over 43% of shares. And our insiders continue to support the stock, and you can see that online on SEDI from the steady stream of support they've offered the company over the years. From an investment perspective, every CEO tells you that their company is undervalued, and I'm not going to be any different. But what I am going to tell you is that we are currently trading below 1 times 22 revenue, and we're a profitable business. So I feel like that is on its own, with a tight float and insider support, a very compelling investment case, giving the foundations and growth that we have. So this is just an opportunity for me to put up some great photos. So I just thought I'd take it. See some of the new drops that have just come. And I'd just like to thank Paul and Trevor for the opportunity.
Awesome. Fantastic, Margaret. Great job. I'm going to jump out with one question right off the top of my head.
Yeah.
You keep mentioning premium. How do you distinguish what's premium and not, for those that don't know the industry?
So I would say it's very similar to the Whole Foods experience or an alcohol experience. When you walk into and a way to distinguish that is, if you also ever bought organic strawberries, if you walk into a store and buy just a clamshell of strawberries that are kind of put in there, they probably were packaged when they were green, they come out maybe, and they've maybe turned red when you go to bite them and eat into them. That is a very similar experience you're going to have with premium cannabis, which is, it might look that usually the bud formation and structure is different and isn't improved, but the experience to the smoker, to the connoisseur, is really improved and different. It's more full bodied. Some people like to equate it to drinking proof alcohol instead of a fine wine.
I was going to bring up wine. I don't know, maybe it's the Italian in me. Sure. Makes sense. Before I go on with other questions, I want to remind everybody that's listening, if you've got a question you'd like me to ask Margaret, please use the chat function, and I'll fire away with that question. Listen, I mean, you answered so many of the questions I usually prepare here. You guys, you mentioned that you are in sort of the majority of the country. Is there any markets that you're not in that you want to get in? And I always ask sort of what's the addressable market, but more specific to what you're trying to do, how much bigger can it be here in Canada for what you're trying to do?
Well, I think the Canadian market is going to continue to grow. We've definitely seen the trend. A couple of things in terms of market in Canada. We see 40 to 50%. Some people say somewhere between 40 and 60% of the market is still in the illicit market. And we believe that actually weighs heavier in premium, in connoisseurs. Look, I think there's a lot of very poor quality product that's just being pushed out into market at any price to turn dollars right now. That isn't the future of this industry. We've lobbied quite significantly with our local government here in British Columbia, and they did listen, to take down window coverings in stores, because the stigmatization is actually a big part of why consumers don't go in. It's very important that the behavior is normalized much more similar to an alcohol if it's a legal product. So we encourage that, and we actively work on that and communicate with government on it. So look, I think as I said, the premium market and the overall market can grow massively. And beyond Canada, the world is going to turn on to cannabis, and it is starting. I think it's going to be choppy. We made a decision to exit our international program in the fall because of the senior time and cost that it was causing, where we believe building the brand in Canada will actually stabilize the business in the long term and gives us the platform to add additional products underneath. But I think there's the opportunities around the world are huge.
You did touch on in your presentations for the new opportunities or new initiatives you're going through. Maybe let's talk a little bit more about that. It sounds like you're constantly coming up with new products. Let's talk about that. And I'm interested in knowing, how do you actually launch a product? This is a tightly controlled industry. How do you get your product on the shelf?
Well, we have an extensive commercial team that is experienced with this. So we start with an idea, very simply, and then we run a traditional consumer packaged goods gate process of idea through commercialization, value chain. So looking at what the profitability is, making sure that we're assessing if the individual unit is going to, for the product that we have, going to sell at a price that's compelling. We also look at the size of the prize. One person may absolutely love one product, but we might only sell one unit. That's not worth the time to commercialize. So I think that's one of the things in cannabis that's interesting, is really looking and understanding your consumer. And we believe in that. And then we commercialize it from there. Once you decide to launch and go after a product, depending on the province and the customer, it can take a long time to get it listed. So for example, in Ontario, there's 2 product calls a year. You have to be prepared and organized for that. And cannabis is moving much more towards, I would say, a Walmart style model of assessing their customers, or Costco. So they are very focused on making sure that you fill your POs, your fill rates, that you're delivering on time as expected. And those customer scores are really, really important in terms of being able to achieve your listings. So execution is not just from the plant getting a great product into a jar. It's everything else that you do and understanding what your customer needs are.
And then let's try to look a little bit further out. Where do you see sort of product development? What's exciting in terms of potential new products?
I'm very excited about Wildflower. I think that the Wildflower and moving towards edibles and other product categories are great. In fact, I probably have a stick sitting here on my desk somewhere. I think it is a very comfortable entry CBD product. We'll be looking at various things around wellness. We believe building that category is a huge opportunity. We've seen wellness across the board in every store. Frankly, you go into a grocery store, they will have some sort of wellness consideration. And again, back to the Whole Foods example is a great one. That's where Wildflower really shines. We've also seen a very interesting shift in market dynamics. And I don't know if it's a exclusively Canadian thing, but I certainly know in the UK, the shift away from alcohol is real. We've seen Guinness Zero go to, I can't recall what it's called, but Guinness, non-alcoholic Guinness has risen in the UK to one of the top selling beers. I think we're seeing that across Canada and Consumer's Choice. What we're really seeing anecdotally, and I think the data is just starting to prove it out, is that the edibles category is the entry point for people into this, and they're taking non-alcoholic beverages and moving into edibles, waking up the next morning, feeling good, no hangover, less impact on the body, less calories, great sleep. And there's a lot of daily consumers doing that. And that is really interesting to us. So I would say, whether you're a live rosin, more full-bodied experience out of 1964 when we're growing that category, but also looking at the Wildflower sleep relaxation consumer, those are daily consumers. And that's what really appeals to us.
That's interesting. I think I read in the last quarter you reported you saw a very meaningful jump in revenue. I think 71%, if I'm not mistaken. How does that happen? Like, how do you what happened to generate that kind of jump in revenues?
Consistency, brand consistency. It is operations and brand consistency, and that comes from our people. And so, we are not an I, we are a we. And you all have to move together, and we don't always get everything right, but we hustle, we shift, we pivot, and we care. And so everybody on the team is important, from the person who hires an individual through to the cultivation team who grow this beautiful weed, through to our processing and curing team, packing, order fulfillment, getting things out the door, and then the sales team, making sure that the consumers understand the beauty of the product that we have and why it's unique. So while we're in a stage where there's a lack of trust in the industry, we are looking to build that consumer trust with our brands.
Mm-hmm. Now, you mentioned, I believe, the Delta facilities at or near capacity. What do you do to grow capacity from here?
Great question. And I will come back to the presentation. There's twofold. One is we're actually putting in tables through the months of August and September, which will increase capacity 5 to 7%. It's about finding the right points for maximizing each gram that we get out. So maximizing the profit in terms of which brand does it go into, how does it sit in the marketplace, and which province. Frankly, the provinces have different profitabilities. And then looking at contract grow and non-capacity utilization products. That's my focus on Wildflower. We believe it's a real opportunity in the industry. And then beyond that, look, we're a public company, so unless I've got something inked and out, I think what you'll see is we understand and see the distress in the industry. We will not be picking up significant debt loads from others. We're operators. We're going to keep our business safe, but we're going to drive forward. And there's an opportunity to look at distressed assets. So as I said, they are getting cheaper.
Yeah, and I really want to spend some time talking about that. So I love the idea of contract grow, but what sort of resources do you have to have? It sounds like it's mostly manpower. How do you make sure you have what you need to be able to even do that piece?
Great question, because we've already spent quite a bit of time. Look, I think the good growers become known because of their reputations in the industry. Fortunately, we've been in this game for a while, and we have some really good people that really know BC weed and know what great looks like. We keep our ear to the ground. We go out. One of our exec team at a minimum walks every facility. The first contract grower, I was speaking with the leader of that business this morning, very proud to be associated with. We will be focused on our brand names rather than the grower names, to be frank. But we're looking for good people that do what they say they're going to do. And if they don't, here's one thing that I've said to our team, which is everybody who's a good grower will get the opportunity to work with us. But if you don't play by the rules and deliver, we won't work with you again. And that will be a signal to the industry about your capability.
You just talked about assets that are going for pennies on the dollar. Clearly, we're seeing big rationalization in the industry. Give us a sense of the kind of, I guess, prices or valuations you're seeing. I mean, there's clearly the public space, but there's also a lot of private companies that are probably in trouble as well. What does it look like out there for potential buyer like you guys?
It looks like a list of companies calling regularly with people in tears. And so at this stage, what people are trying to do is sell anything they can to get their debt load down so they're not into personal bankruptcy. Any director or of one of those companies does have personal liability for a couple of things. One is the excise tax that's owed to the government because it's a tax. The other is their people and salaries. I think the debt holders in those cases are taking over businesses, and we now have, it is confirmed that CRA has gone in and shut down businesses and forced the sale of assets. That means that they're looking at, somebody might say on their books their assets worth $12 to $15 million, but if the debt is to CRA is 3 to 4, all they care about is getting their 3 to 4 million back. So I think you have to remember that we're looking at a pennies on the dollar situation. Now, on the flip side, there are good operations out there. There are companies that are emerging that know what they're doing. And I don't want to say that all is lost, because I know who those companies are. I believe, and I'm proud that we are one of them. And so we are all watching, looking at our balance sheets. There isn't capital coming to save you, so you have to be conscious of your decisions. But we believe in this industry. This will be a large industry. I do also believe that the government of Canada will be forced into some regulatory change at some point, given the sheer destruction of capital that's occurred. And as a result, those companies that make it to the other side will actually really benefit. And the industry will be consolidated. Clearly there was not a supply management issue happening. And when in the early days, a license probably was worth $20 million on its own. That doesn't exist. Same thing for a retail store. If you won the lottery in Ontario, you could sell it for $5 to $6 million. That doesn't exist today. And in the long term, that's good. I think the gold rush was tricky to manage because, you know, as a finance person who's pretty straightforward, people were making extravagant claims. Other companies were making very extravagant claims, and we were very optimistic in terms of where we thought the price of product would be, and what our profitability would be off the back of that. If we were selling everything at Simply Bare, you know, over $10 a gram, which was, we thought we'd be more than that back in the day today, and that's what the taxation is based on. We'd be over a $30 million EBITDA business today. So it's about looking at, there's some structural things that will change, but look, this industry is real and it exists, and these consumers exist. So it will create a great industry is coming, and the world is going to turn on. So I think this is a natural down cycle. And this is where the good companies emerge.
Yeah.
It's just that simple, right?
Yeah. Completely agree. And we're seeing it, like we're seeing the sort of the stronger ones are standing, the other ones are falling apart. Again, you mentioned something that I want to ask you about is the capital markets have dried up for this industry. I mean, you're not seeing anywhere near the kind of financings we've seen in the past, and quite possibly the exact opposite, where a lot of investors are fleeing. What are you seeing firsthand? Like when you speak to, you got two analysts covering you. I'm sure you've got investors calling you. What's sort of the mood out there from the capital markets?
Interesting, because I find it changes in about 3-week increments. It changes. It's our market is moving that fast. There's been a very, very interesting development in the last month, where at the end of June, the TSX accepted TerraSend, a US plant touching company. They're restructuring to list on the TSX. This could be the next great catalyst. It could. I'm not going to say it is. There's some big catalysts to come in the industry. That could be it. I think TerraSend was trading at a reasonably good multiple when it went out, and they took the first trading day, which was to go out, which was Independence Day of the US, which is July 4th, not a great day. But what's happened since that day is it is now confirmed that at least 2, and I just heard this morning, possibly 3, but I haven't got it confirmed, of the large US banks have cleared settlement. So New York Bank Mellon and JP Morgan have cleared settlement to trade those shares on the TSX. In order to list on the TSX, from what I understand, there will be a need to have assets outside of the US to do it. And I think that that's an interesting, there could be an interest from US companies looking north to say, how do we build North American assets? How do we get on the TSX to access those institutional investors? And there's quite a bit of chatter about that. That's the change. I believe that there will be changes in the US on the SAFE Act and some catalysts there. And I believe in 24, don't hold me to it because I can't control government, that Canadian regulation will be looking to make some changes.
Gotcha.
So I think there's some big catalysts to come.
Yeah.
The timing of which is hard to predict.
Yeah.
But we're the positioning is there.
Right. Fair enough. Okay, a couple questions have come in. I'm going to ask them here. Okay, we kind of covered that in regards to capacity. You've got some plans. I mean, is there any? Are you looking at any sort of organic capacity improvements? Are you looking to build another facility in Delta or something along those lines, or is it mostly contract operations or buying assets on the cheap? What can you say?
I would say plan A is is contract grow and contract manufacturing. If that isn't a successful route, we will go into the other, but the balance sheet dynamic and focusing on brand is a big part of that. I think that the good growers are emerging, and they're emerging now. So now is the moment to take advantage of that from a balance sheet perspective. I would say we could build additional capacity at Delta. I think that would be a long and expensive process, and there are distressed assets in the neighborhood that we can look at.
Yeah.
So, we're certainly intensely aware of all of the distressed assets.
And I mean, let's talk about your balance sheet. Like, where are you in terms of your ability to go and buy some assets or do some of these things? How comfortable are you? You've got the right balance sheet right now.
So I have a absolutely wonderful creditor group out of the Cayman Islands, but it's a group of individuals. We have 8 million US of debt, which has no covenants on it other than we have to pay the interest. And it moved from 6.5% on June 30th to 7.5%. So we're actually still below prime, I believe, in Canada, or maybe just around prime in Canada, which is pretty incredible for a cannabis company. I suspect we'd always thought we'd be paying off that debt. I suspect we'll keep it given the cheapness of the cost of capital, even if it moves into current on our balance sheet next year. And that is an ongoing discussion. I don't want to. But look, given the net cash position that the business is in or close to, depending on CapEx decisions that we make and some of the spending and investment decisions we make, we could make decisions to pay it down. So that's a nice thought, which would mean that it would be additional debt for a new facility, but that's the kind of leverage from an asset to value ratio that's important. And I think, our loan to value is so low given where the rest of the business is. It's not something that's a hindrance, but I do love our 7.5% debt. So I'm going to just keep it.
Sounds good. So another question on the CapEx side, we've got a question here. It says, for the past 2 fiscal years, Rubicon spent 4.1 million and 5.5 on CapEx. Can you shed some light on that spend?
Absolutely. Yeah, we've done some big projects. So because we're speaking about quality, I think one of the surprises that we had, and many in the industry had, but we definitely had, was the amount of tinkering and changes we would need to do to the facility to really make sure we were pumping out super premium product. And so we added additional rows of lights. Those were several $1 million. We did, we tend to be people as operators that trial things and then put them in. We've had things not work out. So for example, we put in trial dehumidification units to see if they would work. And then we went out and we bought them for several $1 million. So we test and check and adjust. Last year, we also had a significant BC Hydro project linking us to the grid, which was massive from a power perspective. And then as part of that, again, we're looking at not having downtime in our facility. We're always looking at ongoing maintenance. We purchased a backup generator to make sure that we had a generator on site in case we come off power. This year, the focus is on tables. There's been some CO2 tanks that have gone in and a few things like that. So there usually is a focus, a risk management, and a stabilization on quality that we're doing in terms of a maintenance cycle. I don't think that you can expect that level of CapEx spend to continue from us. I had guided that we'd be less than 3.5 million this year. We could shut that down at any time to keep the cash in the business, but I think it's the right thing to do in terms of that ongoing mission of keeping quality really, really high.
Perfect. What keeps you up at night?
The black market, the illicit market, and not having government hear us. And I'm sorry, my dog is dreaming at my feet. If you can hear that, I'm quite embarrassed.
Mine was just barking, so it's a bit of a dog fest here. Yeah.
Somebody getting hurt at work. Normal management things that I think should. I think regulatory change and when that timeline is probably keeps me up at night in terms of, we're being taxed on the top line, not the bottom line. So I do believe that change will come. I don't know where it will come, but it will come. And then it's just standard manufacturing concerns. Yeah.
We look at this industry right now. We can't see almost anything but good things starting to happen, right? The industry is rationalizing. It's a buyer's market. I mean, it's a buyer's market from an investor standpoint, but it's a buyer's market for groups like yourselves that are out there, hoping to grow through asset acquisitions. Is there anything else we're kind of missing? Like what's sort of that thing that we don't see coming that potentially could change the industry for the downside?
Oh, for the downside.
Yeah.
I think,
and then give us the upside. I mean,
yeah,
I want to sort of know everything we see coming.
on the downside, I think it's what we've been experiencing this summer is some pretty drastic price drops from that inventory that people are just trying to clear out to turn anything into cash. We saw it coming. It's frustrating, right? When you're trying to hold the line. And I think it's short term because we know what the cost base of these assets are. This is just death spiral stuff, right? So that's probably the short term downside. I'm just trying to think of the others. I think lack of regulatory change is the other one. You know, where government doesn't understand the strength of the illicit market. And frankly, what's happened a bit there is that it's actually not the mom and pops that are growing in small grows. It's now moving into a larger because they've been taken out of business. It's actually the more concerning groups that are involved in the trade now. And that's not what we want, right? Like, you know, mom and pops that are growing in a small barn to give to their local friends in a small community. They are just part of the BC cannabis culture, and that gives us lore and legacy, and we respect it. It's really when it gets into organized crime that it's concerning.
Right. Yeah. Fair enough. Let's talk about any sort of catalyst or metrics. You know, as investors sort of looking in, what do you think makes the most sense for us to really understand either your business specifically, or maybe catalysts around the industry that we should really be watching out for?
I think there's two right now. One is consistent performance and brand recognition. And you know, oddly, Reddit reviews are important to our business. Things like that, because of the limited ability for us to communicate with people. So, you know, as we're seeing this real capitulation in the market, it's about just holding the line this year. And those companies that come out of this year, I believe, are going to be the winners. You know, if you don't go down, and if you haven't gone down or aren't going down in the next few months, and I know there's a lot of people hanging on just from the, you know, there's the nails are sitting there. You know, once that happens, that's probably what's next. And then I think there's a really interesting call of, do the US companies move to the TSX? And what happens with settlement and trading and the ability to invest in them? And I think, if that starts to move, or, you know, they need Canadian assets or things like that, I mean, I don't know what will happen. But things could get very interesting here.
Now, I just noticed a question I didn't ask from one of our viewers here. When it comes to cannabis and you know, number of your products here, what sort of regulations are there as far as safety? Like,
significant.
How does it get sort of policed?
Massively. So, and this is a big difference between the illicit market and the legal market. Our products are tested all the way along. They are sent to a lab for COA testing on things like pesticide and microbials. We're not only regulated, we have regular visits from Health Canada, but we're not only regulated by them, we're regulated by various provincial and city requirements. And Rubicon, because we're an organic certified, the Fraser Valley Organic Producers Association comes in and regulates us. So we are a highly regulated industry. I would say we're more regulated like a medicine than we are like an agricultural product. And it's one of the pushes that I have to government to say, why are we not regulated like an agricultural product?
Right. Gotcha. Fair enough. Perfect. Listen, this has been great. We've covered a whole bunch of things, but is there anything that we've missed, or is there a key message you want to make sure everybody walks away with today?
I think the key message I would say is now is the time to look for the operators that are winning, because they will be in 2 to 3 years in very interesting positions. And I think those teams we all know each other. And, you know, I'm very proud to have our company associated in that group, keeping balance sheet strong, balance sheet. You know, I think, I'm very comfortable making some decisions, investing in our business and in CapEx and things like that. I think it's the right thing to do when you're in a strong position, to make sure that you stay in that strong position, to make sure you have great quality out there. But, you know, good reputation, doing it right, putting integrity through what you do. Basic business 101, treat people well, deliver to your customer. It matters.
Simple business, hard to execute for a lot of people. Margaret, this has been great. We've been speaking with Margaret Brodie, CEO of Rubicon Organics, symbols ROMJ on the Venture Exchange. Thanks for joining us today, Margaret, and we really look forward to catching up with you in the near future.
Thanks, Paul, and thanks, Trevor. Great to be here, everyone. And anybody, please feel free to reach out to IR Rubicon Organics. Chase us up. We're happy to answer any questions and spend any time you want as well. I'd say now's a good time to be looking at Rubicon before the fall as well.
Fantastic. Thank you so much.
Thank you. Bye-bye.